All right, good afternoon, Dan and traders from around the world. We're back with another earnings report. How are you doing this evening?
Doing well. Good to be back. Good to be in the heart of earnings season, and we have some pretty interesting results from two companies today. One being Amazon, and the other one being NIO. I know there's a lot of real life traders in our community that have decent positions in both. One is a juggernaut, and the other one is it's okay, but it looks like it's still very infantile stages and growing. But I know there's a lot of speculation around it, especially after what Tesla did. So we're going to kick it off with Amazon. What do you think Amazon? How do you think the results went for them for this quarter?
Well, Amazon is gapping up after hours to an all-time high. So it looks like the market likes it. It is fading just a little bit. It's kind of to be expected with a big gap like that. But if I take a deep dive into Amazon, let's just go back to page 1 here and scroll down on these slides. Free cash flow, this is trailing 12 months, up 9% year over year. So 26, these are billions. So 26 billion in free cash flow, which is fantastic. And also their net sales, over 108 billion dollars in net sales, up 44% year over year. Looks phenomenal to me.
Yeah, once you get into this billion-dollar range, usually companies start to plateau, level out. It's very rare to see companies getting 40% year over year increase in sales when you have already produced so much already. So they have, and I think it was a documentary I watched not too long ago about Amazon. It's just they have their hand in so many different avenues, and they spend a decent amount of money into new opportunities and things like that. And that, I think, is part of the reason that they're able to grow. If they just look at just the retail portion of things, I mean, who has not heard of Amazon, right? So there's going to be a certain level of plateau, and then from that point they'd be like, all right, well, how do we get more sales from it? But the fact that they have so much of their revenue now coming from other sources, it's a very, very well established business. And it looks like that's the up on the screen we have the chart from North America, International, and then just this whole section for AWS, which is a web service. And I think that's a huge growing opportunity for them still.
Yeah, this is just, I mean, it's only 11%, but it's a very fast growing number. And I mean, what is that? $48 billion in net sales is pretty darn good. And you can see only 28% coming from international. So US, or North America, I should say, represents a large portion, but they definitely have tons of room to grow internationally and on the internet as well. And I know that operating income, a lot of people focus on, that, and net income, we'll see here in just a moment, but it appears to me that they can turn the screws and work on efficiency, and they continue to increase their operating income. So becoming more and more profitable as time goes on, which I think is really cool.
And their focus has been from day one. It's been customer service, focus on the customer, and focus on efficiency. And they've built. You see companies like Apple building. I mean, they're famous for putting out the phrase ecosystem, where they have their ecosystem of products. They're developing in such a way where not only do they have the ecosystem for the consumer, but they're really building an ecosystem for themselves as well, which is almost a different take to even some of the larger companies that we've seen, in the fact that they're saying, all right, well, we could do this. Like we've been experiencing this service through our company, and we just think we could do it better. And a lot of times they'll go full force into the products and services that they use and need to survive or have been able to implement almost just a better way of doing it. So it's a very interesting concept that they've done, and they've been wildly successful being able to manage the multiple divisions. And right there, that AWS is honestly, I think at some point AWS could actually become bigger than their actual retail portion of the business currently.
Yeah, it's definitely more profitable too. I mean, look at the net sales of 13 billion and then 4.1 billion in profit or operating income. That's pretty darn solid. And if we go over to this other note that they put out, they did celebrate 10 years for Prime Video, and it looks like they also increased their spend in shows and movies. And then I think it was Academy Awards. I don't know how many people watch that type of stuff anymore, but in 15 years, they've also increased AWS to become 54 billion annual sales. That continues to accelerate companies from Airbnb to McDonald's to Volkswagen. I mean, just who doesn't use Amazon Web Services? It seems like almost everybody.
Yeah. And with the Academy Awards, just to address that, I think viewership is actually down on that, so that's not as probably as meaningful. What is meaningful is that it's a streaming service. So a lot of times, I mean, historically, all of the Academy Awards, if the movie was in theaters, then you could qualify for the Academy Awards. So the fact that they were able to reach into the entertainment industry, which I know Jeff Bezos had a huge interest in doing so, they're able to create content that can stand up against some of these big multi-million-dollar features that have been in theaters and get tons of publicity around. So that kind of shows and pushes the direction of Amazon Prime, saying like, hey, we're here. You're gonna have to deal with us. And I think that's good compared to Netflix. Personally, I still like Netflix's content a little bit better, but I think Amazon has a good foot in the door, and it's definitely it's at least a good strong reason to keep people in the Amazon Prime field with the membership.
Yep, for sure. I mean, if you have Amazon Prime, why not watch Amazon Video and Amazon Music as well? And they also have additional add-ons where you can pay for more content or more premium content on there. But just with your Prime membership, there's a lot of additional benefits. So, and I did notice that they increased the price this last year, because I saw a charge come through on my account and I'm like, what the heck is this? And it was Amazon Prime membership. They increased the price.
Did that make you want to quit?
No, I mean, it sucks whenever you see the price go up on something you're paying for, but I'm like, well, it's kind of a must-have, it seems like.
Yeah, well, and you could use it for different aspects as well too. So again, that's going to be an advantage for Amazon, because your Prime membership will get you additional features besides just the content. So you get that 2-day shipping, which everybody enjoys. You also have access into the Whole Food markets and get discounts on things like that as well. So Netflix is, if you're comparing Amazon Prime to Netflix, anytime that Netflix makes an increase to price, people feel it and they go, is the content really worth it? Where if Amazon increases prices and they go, yeah, okay, let's push it up a little bit, you tend not to, like you said, it's you're like, oh, this is horrible. I'm paying more money, and then you kind of weigh out the other additional benefits to it, and it's still a very strong membership to have because of the additional features that Amazon's been able to position itself as.
Yeah, and just looking through this earnings release doc, again, it's 20 pages, so we can't go over everything. But if you look in here, as you mentioned earlier, there's just stuff they have, their fingers in a lot of different things, whether it's NFL. I think I saw solar roofs over here somewhere. Where was that? Climate pledge. At their facilities, they're installing solar. Okay. So they have all kinds of stuff going on. Also looking to have electric vehicles to help deliver in their delivery fleet, it looks like, by 2030. So not sure who's going to be making those, but it's probably not Workhorse if I were to guess. So Amazon stock again gapping up after hours to an all-time high. Where do you think the stock goes from here?
Yeah, so long term, it's probably going higher. So what do you think about I know there was a lot of rumors about the split for Amazon. I didn't see or hear anything in regards to that. The stock is still moving higher based on the earnings, and I believe we had a little bit run up based on the rumors of there could be an Amazon stock split. What do you see in the future for Amazon and the stock split?
Yeah, I don't think that they're going to split the stock. I would love for them to do it. I think if they want to get onto the Dow, which I think the Dow is kind of a crappy index anyways, but if they want to get onto the Dow because it's price weighted instead of market cap, They would have to split, but I don't think they really care. Unless the new CEO all of a sudden is going to care for whatever reason. I don't think they care with being in the Dow. Like you mentioned, their number one priority has been customers, and then, now they're focused a bit on employees with a lot of things that are going on with like unions and raising wages and all that. So I don't think the stock is too much of a concern for leadership. So I don't think that they're going to do a split.
Yeah. And in regards to the charting too, and a lot of times when you see these type of gaps, you go, all right, well, I mean, everybody's profitable right now. It's literally pushing into all-time highs with the earnings report that came out. I think I might see a little bit of fade, but I think it's going to hold very strong. That 3410 resistance on the chart is a very strong one, and we did break out even before the earnings. I don't really see why Amazon would fade past there. The business model is still strong. They make tons of money. They like we said, they have their hand in pretty much everything. So it's a very solid core business. Even though the price tag of the stock is high, I think it has much more room to run. And I could see, like I said, maybe if we catch it up that now support, previous resistance area, that could be a good spot to bounce, try to pick up shares. But I think if you're just adding it to a long term, do I think in 10 years from now, the price is going to be higher than it currently is? I would have to say yes. I think we go higher from here. So I'm not even seeing a huge pullback from me.
Yeah, I mean, we've been going sideways for almost a year, like 10 months. I was kind of looking over when it broke out of this other consolidation. So earnings over here, it gapped up, but that was not to an all-time high. This earnings right here, it did gap up to an all-time high, pulled back really quickly, and then just, marched onto this huge run. And then again, we've been going sideways for a while. So if this breakout holds, retests, and then we do get the bounce, I mean, we could be off to the races, into the 4,000s for sure. But I do think there will be a short-term pullback there.
And last earnings report was interesting. The way that played out, the earnings crushed it. I mean, there was nothing wrong with the earnings, but it was the announcement that Jeff Bezos was stepping down. So now you have a new captain of the same ship, and people are like, well, maybe it's not as good or strong or whatever, but the business is still there. And I believe Jeff Bezos is still on the board, and still probably has a huge say of what's going on. So even though there's a new CEO, this is really the first earnings that came out since he took over, and you're still seeing that Amazon's crushing it. So that might have been the little bit of a fear that held it back from pushing initially higher. And I think maybe that adds possibly a little bit more pent up demand and maybe a little bit more FOMO from retail traders and maybe even hedge funds just trying to jump in at this point.
Yeah, and you also have the infamous penguin pattern of the moving averages. Kind of looks like a little penguin here. Someone had mentioned that when I looked at this chart earlier. I'm like, what? It does kind of look like a penguin. So yeah, buy the dip on Amazon. Obviously it's really expensive, so you're probably only buying, 1 or 2 shares at a time. Or, again, even if it doesn't split, you can buy fractional shares on a lot of brokerages. So people can, with Robinhood and all that, like everyone still can participate in some way. So I don't really think a split is necessary.
Right. I agree.
All right, let's jump over to NIO. So NIO is actually pretty flat after hours here. So let's talk about their earnings report. So we come over here. Now, again, some of this is going to be might be a little bit tougher for us to go through because being a Chinese car company, a lot of these numbers are reported in renminbi. There's some conversion to US dollars, but not in all places. I think the biggest highlight for me is deliveries, probably the most important. How many cars are they actually making and giving to customers? And they did have 20,000, so you're seeing a nice increase here. But it's absolutely nowhere near Tesla.
Right. Yeah, I mean, obviously the Chinese market is huge. The opportunity that this company has is huge. I think Tesla has a clear, without a doubt, 100% run on NIO or any other electric car vehicles at this company, like Tesla's already been doing. So Tesla's still a major company. I think if you play this stock, you're looking at what you think they can do. So it's still very speculative. they have sales. They've increased the actual production of vehicles, and again, that's going to be the key number. Are they still able to produce and increase their production on the vehicles? Because number one, that tells you that their warehouse and their factories are up to speed to handle, but it also shows you that there's some kind of demand for the vehicles too. So if there's still demand for the vehicles and people are like, yeah, we like it, and again, it's got a huge market, and you can make some future money. If I think you have to be willing to hold this type of company.
Yeah, hold it through the ups and the downs. That's for sure. So, and again, the renminbi, I think that's 7.4 billion renminbi is 1.1 billion in US dollars. So it is an increase again, year over year. I mean, I don't really know if this is a great comparison, 489%, but it was so small. And then obviously gross profits, they're actually losing money. So if you go over to their margin did, I think it was a decrease, increase quarter over quarter, but their margin is lower than Tesla by about 5 or 6%. Just because that's the only other pure EV play to really compare to. Their margins are a bit lower, so that's a little bit concerning for me. And then the other thing is, yeah, they are still losing money, but then when you look at this net loss attributed to shareholders, it's massive. This is like 4.8 billion renminbi. I think that's like $700 million. And I don't know exactly what this means down here, but they talk about the net loss attributed to shareholders is that in first quarter of 2021, NIO purchased 3.3% equity interest in NIO China from the minority strategic investors and recorded an amount of, obviously this is how much they paid, 671 million in accretion on redeemable non-controlling interest. I'm not sure if it's the way it has to be structured because it's listed in the US, but it's a Chinese company. But it just seems a little bit funky to me. What are your thoughts on that?
Yeah, we were trying to look at that prior to us to getting on this video, and it was a little bit strange. And again, there's going to be a little bit, number one, because it's a Chinese company, we have a little bit, there's a little bit more hoops for US to look at their earnings, and just the way things are set up a little bit from the US market to the Chinese market, and stuff like that is going to play into this type of scenario. So that it is I don't know if it's red flaggish, but it was definitely an interesting thing to read in the report for my sake. So again, maybe I'm looking at it incorrectly, maybe it's just normal part of the business, but and going from I would love to go back to early stages of even Baba just to see how that, if there's anything like that in the Baba report. But so maybe it's business as usual and it's normal, but it is very interesting to look at.
Yeah, as well as like the share-based compensation was up 60% quarter over quarter. Again, year over year is kind of hard to take a look at, but if you look at their actual vehicle sales, like it was up 20% quarter over quarter, but they're giving out 60% more in stock compensation to obviously executives. So I think that's also a little odd. That seems like a very large number to me. I don't know what you think about that, but that also looked a little odd to me.
Yeah, that to me, again, it's alarming because it is a big number percent wise, and a lot of, I mean, US or Chinese, a lot of these guys are getting paid based off of stock compensation, so that could make sense. And I don't know if there's certain goals where if certain targets are reached, you get more. I don't know how those agreements are laid out, but that is a large number to be giving to most likely the board of the company.
Yeah, and then the other thing that I think is, again, they're looking at it like a small number here. So I feel like these numbers should be, this is a little bit of guidance. These numbers should be larger. So deliveries of vehicles, they expect it to be between 21 and 22,000 for Q2, which is only representing a 5 to 10% increase from Q1 of 2021. That that doesn't seem like that big to me. Like, you would think that the growth would be exponential. Like, as you get better at producing something, you should become more efficient, or like new factories come online, and these increases should be bigger. So like, this is a nice jump, you know, 5,000, but then it only jumps 3,000, and then it's only going to jump, you know, another 1,000, maybe 2,000. Right. It seems like that's a slowing slope versus like exponentially increasing.
Right. Yeah, I think that this, like I said, this is a company, if you think about Tesla back in the early stardom days, first of all, no matter what country you're in, it's very difficult to create a car company. There's a lot of money needed. There's a lot of factory. There's a lot of getting the demand out there. The one thing that NIO has that Tesla didn't is that Tesla's already certified that electric vehicles can be a thing. So that's a little bit of a hoop that NIO does not have to jump through, and they're going to the Chinese market, which is a just massive market. But that being said too, being that the market is so huge, those are considerably small jumps. And again, they're in the infantile stage, so maybe they are still building out things. But yeah, that is not a huge increase for the amount of market they can be doing, and maybe they're just holding back on some, or still in the process of making some of the factories.
Yeah, I think kudos to what Tesla's been able to do as far as ramping production. But again, it's kind of like the only thing that we can compare it to. That's like a pure EV play. They do have it says an extraordinary general meeting on June 3rd of 2021. So if you're interested in NIO, obviously check that out. I'm not sure if they're going to be announcing something. It looks like they are going to further proposes to consider, and if thought fit, pass the proposal to amend and restate the company's memorandum and articles of association. Yeah, we'll have to definitely take a little bit more of a deep dive on that. That could be relatively impactful. Where do you see NIO stock going from here?
So as far as NIO stock, I mean, the all-time high was $66.99 to date. We've sold off relatively considerable from that amount, and I think we actually see a little bit further drop on this one. Again, it's just they're still very new. The excitement that ran up NIO, I don't think actually relates to the actual numbers that this company is producing at this point. Even at these ranges, which has been a very, very decent support right around this $34 range. We have a very strong support there. You do have that 200 moving average in. I think the price got inflated quite a bit, mainly because of not NIO, but more Tesla. And the fact that these guys are producing an actual car, putting it out into the market, and people look at it and say, well, look at the Tesla run, NIO maybe could do the same. So I think there's a lot of hopes and dreams built into the stock price on this. And the fact that these earnings came out, we haven't really seen any type of real aftermarket move yet. It doesn't seem to me like there's as much interest in buying at this price right now. So I think they have to show us, for me to add it to a long term, it would be 100% speculative play if I think that they're going to survive the initiation stages of any company, especially of this magnitude. And if I think they can, I'll be able to buy some and just tuck it away, not look at it for a while. If I'm looking at the ups and downs, I think I'm going to go absolutely crazy. But to me, after these earning reports, again, we've seen what Tesla could do. Tesla put out some very incredible earnings. If people are really thinking that this is the next Tesla, once you have these earning reports, there should be some kind of level of interest of buying, and there wasn't really any when this report came out. So I did find that a little bit interesting. I think we could actually head a little bit lower. And if we do, even down to like the $26 range, I'd be a little bit more interested in picking up some shares down there.
Yeah, as you mentioned, 34 has held pretty strong, but I would definitely like it much closer to that, like 25, 26 level, and definitely pyramid in. So if you wanted to start grabbing some around like 32 and pyramid all the way into like 24, or heck, even, I mean, I don't know that it's going to come to 22, but it's definitely possible. That would probably be what I would look for. So yeah, that's it for me. Anything else from you, Dan, before we close it out for this evening?
No, I think that wraps it up. Thank you guys for joining us for another episode of the Earnings.